Are you ready for the next big market move? Because the clock's ticking and we've uncovered 3 dividend titans that are flying completely under the radar. These aren't just ordinary stocks. They're hidden gems packed with explosive potential, ready to deliver serious value. Why the rush? In a market where the S&P 500 has surged over 30% since last November, true bargains are as rare as desert rain. But we've done it. We've found 3 criminally undervalued gems poised for breakout.
One by one, we're going to earn our way back, and it's all about revenue growth, margin expansion.
Here's the kicker. This opportunity is evaporating fast. Big money's sniffing around, and when they pounce, these stocks will soar. Your window? It could be days, maybe hours. Now, let's dive into the heart of the matter. The S&P 500 has been on a roller coaster ride lately, surging more than 30% since last November's low and flirting with record highs. This bull run has left bargain hunters like us scratching our heads, wondering if there are any deals left on the table. But fear not, because our team of expert analysts has been working around the clock to uncover the last remaining bargains in this frothy market. Grab a pen and buckle up. We're diving into 3 industry titans with rock-solid fundamentals and explosive potential. Let's start with our first pick, United Parcel Service, ticker UPS. UPS, a logistics powerhouse, has seen its stock price plummet 45% from its early 2022 peak. The stock has been on a downturn, but it might be turning a corner soon. To spot when UPS is ready for a comeback, keep a close eye on the EMA. If the stock price crosses above the 50-day EMA, it may indicate the start of a new upward trend. The shipping industry is still recovering from the post-pandemic slump, but e-commerce and intermodal rail traffic are increasing, which is good news for UPS. Let's break it down. Use the MACD to track momentum. A bullish crossover when the MACD line moves above the signal line could suggest that UPS is about to gain some serious traction. In addition, UPS is investing heavily in automation and AI, positioning itself as a leader in logistics innovation. Keep an eye on Bollinger Bands too. If the stock trades near the lower band, it might be oversold, offering a strong buying opportunity, especially if the MACD confirms upward momentum. But UPS isn't just about the numbers, it's about resilience and adaptation. The company has been investing heavily in automation and AI to streamline its operations. They're not just keeping up with the times, they're setting the pace for the entire industry. From drone deliveries to electric vehicles, UPS is positioning itself at the forefront of logistics innovation. And with a forward dividend yield of 5%, this stock offers not just growth potential, but income stability. But before we jump to our next stock pick, here's a question that will get your investing gears turning. What's the one stock market myth you wish you could debunk for every new investor? Drop your wisdom bombs in the comments below. Let's bust those market misconceptions together. Now, let's unpack our next potential gold mine. Moving on to our second pick, Devon Energy, ticker DVN. Devon's stock has pulled back 22% from its peak, and that makes it an intriguing entry point. But given the energy sector's volatility, use technical indicators to get the timing right. The EMA can help assess if the price is beginning to recover, especially after a period of pullback. What sets Devon apart is its flexible dividend policy, paying out a high percentage of earnings to shareholders. Use the MACD to confirm shifts in momentum. When the MACD line crosses above the signal line, it might indicate a bullish move ahead. Additionally, tracking Bollinger Bands will help you gauge volatility and oversold conditions in this volatile energy sector. Oil and gas prices can fluctuate, but Devon's strategic onshore projects and tech investments give it a long-term edge. But Devon isn't resting on its laurels. The company is actively investing in technologies to reduce its environmental footprint. From water recycling initiatives to methane leak detection systems, Devon is positioning itself as a responsible player in a carbon-conscious world. This forward-thinking approach not only helps the planet, but also makes Devon a more attractive investment for ESG-focused funds. Timing matters. If Devon's stock is nearing the lower Bollinger Band and RSI indicates it's oversold, this could be your buy signal for a high-yield position. Last, but certainly not least, we have Franklin Resources, ticker BN. Lastly, we have Franklin Resources, an investment management firm. Its shares have plummeted 35% from last year, driving its dividend yield up to a jaw-dropping 6%. But how do you know when to dive in? Start by looking at the RSI. If the RSI dips below 30, the stock might be oversold and due for a bounce. Combine this with a MACD crossover to confirm when momentum is shifting upward. Let's bust some myths. While it's true that ETFs are gaining popularity, traditional mutual funds, Franklin's bread and butter, are far from dead. In fact, data from the investment company Institute shows that US fund companies companies were managing a staggering $33.6 trillion in assets by the end of last year. And guess what? Most of this money is still in good old-fashioned mutual funds, not ETFs. Franklin Resources manages $1.66 trillion in assets, with a reliable revenue stream even during market downturns. This stock is a long-term play, and watching indicators like EMA and Bollinger Bands will ensure you make the move at the right time. If the price dips near the lower Bollinger Band, but the fundamentals remain strong, it could indicate that the stock is oversold. Looking ahead, analysts are projecting a 7% revenue growth for Franklin this year, followed by another 6% growth next year. This isn't just growth, it's accelerating momentum. And let's not forget about the dividends. Franklin Resources has increased its dividend every single year for the past 44 years. In the world of dividend investing, that's like finding the Holy Grail. But Franklin isn't just sitting pretty on its legacy. The company is actively adapting to the changing investment landscape. They've been expanding their ETF offerings, venturing into alternative investments, and even exploring blockchain technology. This blend of traditional strength and innovative spirit makes Franklin Resources a uniquely positioned player in the financial sector. Let's break down the table briefly. United Parcel Service is currently priced at $132.47 with a market capitalization of $112 billion. It's generating impressive revenue of $90.74 billion and offers a 5% dividend yield backed by an earnings per share of $6.13. Devon Energy, priced at $40.95, holds a market cap of $25 billion with revenues of $15.14 billion. While its dividend yield is slightly lower at 2.1%, its EPS of $5.52 shows strong profitability. Lastly, Franklin Resources trades at $20.79 with a market cap of $11 billion and generates $7.89 billion in revenue. It's the yield leader here, offering a substantial 6% dividend, though its EPS stands at $1.62. These stats make all three companies compelling choices, each presenting a unique balance of yield, profitability, and growth potential for long-term investors. All right, let's wrap this up with a quick rundown of our dividend all-stars. First, we've got UPS, not just brown trucks, but a 5% yield and a front row seat to the e-commerce explosion. Then there's Devon Energy, serving up a 4.7% dividend that rides the oil price waves. It's like surfing, but for your portfolio. Last but not least, Franklin Resources, the underdog with a 6% yield and a 44-year streak of dividend hikes. They're old school with new tricks. Before we wrap up, here's one last brain teaser for you. If you could swap your portfolio with any historical figures investments, whose would you choose and why? Imagine Warren Buffett arm wrestling Benjamin Franklin over stock picks. Drop your time-traveling investment fantasies in the comments below. We can't wait to see what you come up with. These aren't just stocks, folks. They're opportunities knocking on your portfolio's door. So, are you ready to answer? Remember, the window of opportunity for these discounted dividend stocks won't stay open forever. As the market catches on to their true value, prices are likely to adjust upward. This is your chance to get in on the ground floor of what could be the next big market movers. Before we close, I want to remind you that this video is for informational purposes only and does not constitute financial advice. Always do your own research and consult with a qualified financial advisor before making investment decisions. If you found value in this analysis, please show your support by liking this video and subscribing to our channel. We're committed to bringing you the most insightful, actionable investment ideas week after week. Stay tuned for our next video where we'll uncover more hidden gems in the market. Until next time, this is Simple Investing Secrets, helping you navigate the complex world of finance, one video at a time. Happy investing.